Hey, Dave Diegelman with Equity Real Estate. I wanted to just fill you in on a bonus at the end of this video. You're going to see why I love living in Southern Utah. Many of you know that I've been a professional photographer, a published photographer. Um, well, I'm afraid to admit how long. I don't make my living in it. I make my living at real estate. However, I continue to sell photographs and have and probably always will. At the end of this video, we've had such an outrageously cool winter in Zion. I've got a few selected photos that I'm going to share with you, a few selected videos. So hope you enjoy that. Enjoy the market report. Hi, it's Dave Diegelman with Equity Real Estate. Welcome to our February 2023 marketing review for Southern Utah. And we're going to be looking at some really interesting numbers today. At least they're interesting to me. They might be kind of boring to you, but this is the time of year where we kind of get an idea what the year is going to be in the next few weeks. So this is just the tip of the iceberg right now. And let's take a look. So one of the things I want to share with you first is the number of listings. Our highest number of listings for this past 12 months was October 22nd, and we had 1,715 listings show up as active. Right now, we're at 1,465 listings. So that's a healthy marketplace. It's a normal marketplace. We normally kind of tail off from November through December, and then it picks up again in January and February. So kind of a normal thing right there. If we look at sold listings have come down since October. We were at 309 for the month of October, or October 22nd. And right now, January 23rd, there was 233. That's not that unusual of a drop off. And you can see from over here, from February to March, there was a solid increase. And last year was a crazy, crazy market. But we normally get an increase in February of number of listings and sold listings. One of the interesting things to me is, as I open up my MLS and my quick search, I look at this number right here, or over here is what I print on the report, 1,425. Now, this is for residential searches on our MLS. There are other counties that use our MLS, so it's not exclusive to just Washington County, but it's been fluctuating between 1,400 and 1,700. With the last 2 months being very stable at around 1,450. Now it's down to 1,425. That means that listings are selling. Listing prices, looks like we're taking a nosedive right here, but again, the sold median price, it just means that more people are buying in this price range. And we normally have kind of a falling off between October and January anyway. It's been pretty stable. I think this fall off just is kind of representative of the price categories that we'll look at lower that are selling right now. All price categories are selling, but predominantly we have this mid 400 to $500,000 marketplace that seems to be, predominantly selling, and that skews these numbers on the listing prices. Absorption rate in months. If we look a year ago, less 1 month, so at the end of February, our absorption rate was 1 month, 1.06 months. That means we had 1 month's worth of inventory on the market per how many buyers we had in the market closing deals. So right now we're at 3.7 months inventory. It peaked out at about 4 in November. And again, this is a healthy market. This isn't unusual, but this is probably one of our best indicators of where we are going. I expect this to drop down slightly, but probably not below 3 months. I think we're going to stay stabilized between 3 and 4 months of inventory for the remainder of 2023. I'll tell you why in a minute. Sold to list ratio. So you can see at the peak here, which was May 2022. And that means most of these properties went under contract in April of 2022. And they might have been listed actually in February of 2022, because that's a normal cycle. Anyway, our sold to list ratio is how much our property is selling for versus the listing price. and it grew to 101% or almost 101% in May. So what that means is there was multiple offers and there was very little inventory. So you can see that jive with the inventory rates on the marketing report that I have there. But right now we're at 92% and some change, 92.4%. So this is healthy. If you're a buyer, this is great. That means that the average seller out there on the market from the listing price is negotiating down anywhere from 4 to 8% below the listing price. Again, that's a seasonal thing that does happen at this time of the year if it's going to happen. So I expect that this is going to go up to the 94 to 96% within the next 3 months, but I think it'll stay stable there. Days on the market, that's jumped way up. At our lowest point, we were an average of 17.9 days. So this represents a lot of cash deals that are closing because cash deals don't need to wait for a bank to give approval. Also, there's a lot of banks and lenders that can, close in 25 days, 20 days. So sometimes that has a little bit to do with it, but mostly it's cash buyers. And sometimes we have up to 40% of our marketplace is cash closings. So that's not always true, but it certainly is one of the things that we've seen in Southern Utah come into play. Right now, we've been averaging between 60 and 70 days. We're at 70 days right now on an average. Again, this is a healthy marketplace, normal marketplace. Gone are the days of 20 days, but I suspect this will come between the 40 and 60 day margin within 2 to 3 months. That's where it's going to stabilize out. And then the price volume. So this looks really discouraging because it's been stable and dribbling down. But the reality is for how much volume, sales volume we had last year versus just in December, for example, it's not all that far different. So yes, we took a dip in January, kind of normal. I suspect we're going to be up in the $300 to $400 million mark, which would be consistent with this flatlining right here that we see. So what does that mean? It means we're going to stabilize in our marketplace. We'll probably at the end of the year, quarter 3, quarter 4, have some appreciation that reflects from the late spring, early summer activity. And we'll probably end up growing 8 to 10% again this year. Not again, I say that's a normal marketplace for us. Last year, it was crazy. The year before that, it was crazy. Year before that, it was crazy. So when I say crazy, it was 15 to 25% growth year over year. So I don't anticipate that this year. We might hit 8 or 10%, or we might flatline. We might even go down a pinch, but I kind of doubt it. Summary of statistics. You can see 2023 year to date, the absorption rate is 3.7 months. Last year at this time it was, last year at this time it was 1.1 months. Average list price, or let's go to median list price, slight difference between the two. Year to date 2023, 565 down from 604. Does that mean that listing prices are low? Yes and no. It can also mean that just that category is more popular, that people are putting more homes on the market in a price category. But I do believe that we've stabilized about 10%. So I believe that we've taken about 10% of the cream of the crop from last year's ridiculous, ridiculous growth. And right now I'm seeing more listings that come on at comps, and probably on the lower end of the comps, based on the last 3 months, not the last necessarily 6 months or 8 months or anything like that. Normal comps are 6 months. Whenever I send comps out to a client, I always warn them that some of the comps on there are several months old, and 6 months back from right now, we were in July. We still had a lot of closings in July. The market was just starting to soften then. So the more realistic picture is what's been selling in the last 90 days or 4 months even. So sold listings, let's look at 2023 versus 2022. We are at a negative in every category with the exception of this $400,000 to $450,000 market. And that doesn't surprise me with interest rates growing the way that they have. Affordable housing is kind of one of the key factors right now. But we still have decent numbers in the 450 to 500, 500 to 750, 750 to $1 million, and even the $1 to $2 million mark. Decent numbers all in all of all of those. Pending listings, these are properties that are under contract. We don't know how much they're under contract for. We only know how much they were listed for. And again, we're going to see parallels of this over here with the 400 to 450 being the highest percentage of growth, and then a slight growth in 450 to 499, and then a decrease in the other categories. Again, I don't think this is anything that's that unusual for our marketplace where everything is. We had just a ridiculous year last year in appreciation. In fact, in the 20 years I've been in business, I haven't seen appreciation jump so far, so fast. So active listings, you can see the inventory is building up kind of all around the market on all different categories. The one that surprises me the most is the buildup of the $1 to $2 million marketplace. And I'll tell you why, because oftentimes, and I've said this on the last report too, this is where the best values come in. If you were looking at values as just a factor of you own a piece of property and you want to build X amount of square foot house on it, how much is it going to cost to build today versus what can you pick up something that's already built for? Oftentimes this category is where you find your best deals. So if that's affordable to you, talk to me, because there's some amazing buys out there for the existing home market. New listings coming on the market. We've seen a surge of new listings come on the market. Our numbers show that on the report, but we've also seen a fair amount of sales. So it's balanced it out to where we have this, opening up the MLS. We're at 1,425 to 1,450 now for, I think it's like 2 or 3 months. You can check my older newsletters to see that. But all in all, optimistic for 2023. The Fed has continued to raise rates, although interest rates just recently came down this week to the lowest point since September. I don't hold a lot of credence in that because there's so many programs as a buyer that you can take advantage of. We can get sellers oftentimes to pay closing costs down to where you can buy your points down. There are 10-year ARMs, which used to be a forbidden word, but the interest rates are less on a 10-year ARM, and the odds are that over the next 10 years that you'll be able to refinance. And as my niece, who is a mortgage lender in California, says, you know what, you want to date the rate but marry the home. Such good advice. So anyway, I hope you've enjoyed this. If you have any questions, feel free to give me a call. My direct private line is 435-703-4041. And as promised, here are some video highlights from the last few weeks. This is a time lapse of Hurricane and Zion National Park in the background. This is from up by Colab. Just beautiful days. Full snow in Zion. Again, just magnificent after snow. This is from right behind the visitor center, and I like zooming in on this. This is a stitch of 8 photos, which I often do for landscape photography. Just gives incredible detail. Also have a great time lapse of this, but Zion National Park doesn't allow us to do that. So hope you enjoyed it. Thanks.